Hi, it's Connie from Prosperity Finance. Thanks for coming to our channel. Now, recently we have a client come to us, and this client has a large interest-only loan for the investment property. The interest-only term is about to come off, and they approach the bank and say, "Can I get an extension?" Unfortunately, the bank said no. Now they start worrying because once they start paying principal and interest, there will be quite significant increased payments. So in this case, they want us to help them and see how they can manage this case. Firstly, let's have a look at some numbers so we actually understand what they mean. So in this case, it's $1 million loan on interest only. Assume that interest rates is 4.3%. Now, when they are interest only, they only need to pay $865 per week. Now, with a two property, it's not very difficult to manage that payments level. However, once their loan become principal and interest, they have to pay $1,256, which is almost $400 additional payments. Now, they have to obviously find additional cash to pay that extra $400, right? Now, one way to do that is increase rent. So let's put rent increase. However, you can't really pass the entire $400 per week across two tenants, right? It's just impossible. No tenants can afford that. So the remaining income has to come from other sources. So like the job income or border to help out. Now, if they struggle with that, if they really no extra surplus cash right now sitting around, they can use to pay the extra mortgage, then they were stuck, and the worst scenario is the bank will take the security and the mortgage itself. So we don't really want that, right? Especially with investors, we wait for 10 years to get that capital growth. We don't really want to destroy our wealth if not necessary. So this is just to illustrate how important it is to understand once your interest-only term expires, what is your strategy to face the increased payments? Now, we mentioned earlier, these clients went to their bank, asked for extension. You may be able to borrow much more money a few years ago, but from what we've seen over the last kind of 18 months, the bank has changed the policy significantly. Now, one big impact is the borrowing capacity. So at the moment, if you have same amount of income, that your borrowing capacity potentially reduce half. Therefore, when you do extension, your income calculation won't pass. Therefore, they wouldn't give you interest-only extension. So if you can get extension, that's good. But if you can't, what we can do about it? So one way is to see if any other bank we can refinance to, so that you get extra 5 years interest-only term. Now, when you have a extension decline with your current bank, doesn't mean you can't get a refinance from a different bank, because bank have a different policy. So for example, some bank don't recognize your commission, bonus, etc. Every bank is different. So it's really worthwhile to explore that avenue. And at the same time, we can also look at your structure so that you can max out your asset protection or minimize your interest or tax. So we'll help you to look at all other aspects at the same time of refinancing. We don't normally just for the sake of refinance to refinance. There's always other benefit associated with that. And you probably get some cash back to boost your payment as well. So there's a lot of benefit with that. Now, if you can't do either extension or refinance, then your choices are, if you still have time, you can potentially look into see if you can increase your income. I know it's not easy. Doesn't matter if you're self-employed or PAYE earner. Increase of income is not that easy, especially in a short period of time. But at least it's something for you to consider, especially your interest-only terms still have at least 1 or 2 years. Now, last option is you probably have to consider selling one of your properties. Well, if you start preparing now, you probably can get rid of your non-performing property at the same time and reduce your lending. So that's kind of a set benefit, rather than wait until the bank asks you to sell your property. If you can't meet the additional payments, that will be a disaster, right? And also give you a chance, if you sell one non-performing property, it gives you that borrowing capacity for you to borrow later on for a better property. So it's not a bad thing, and you have a plenty time to prepare so that your property look more attractive, and you can add some values to it, so you can get a better price. You're not in a hurry, etc. So it's actually not a bad option for some clients. So I hope this video just to make you aware that not every time you can get an interest-only term extension when it comes up for expiry. And what you need to do is to prepare earlier and see what option you have. If you need help, of course, we are really welcome for your inquiry. We can help you to find out the possibility of extension, possibility of refinancing, and tidy up your loan structure, etc. Even though you don't increase your lending, that's also part of what we do as well, and we enjoy add value to you. So thank you so much for your time, and I hope you find this video helpful. Please feel free to pass this video to your family and friends so that they can get benefit as well. And also please, if you like our content, we have every week we have some new best financial tips to share with you, so please subscribe our YouTube channel. All right, see you next time. Bye for now.